John Nadler, George Soros, and John Paulson are buying gold. We've learned that from their most recent filings. What do you think? If they're buying, should you?
Not necessarily. I think these are sizable players, but nonetheless, they're portfolio players. And in the case of Soros, I don't think the holdings amount to much more than perhaps 2 or 3% of his overall portfolio. On the other hand, for Paulson, I can't see anyone holding 44% of their portfolio in one concentrated asset class. So that kind of worries me, but hey, maybe he knows better. At any rate, the purchases that they continue to make or sales that they continue to make here and there are basically portfolio plays, and I don't put a lot of weight into them. The media kind of forgot to mention that at the same time as these gentlemen bought, Messrs. Mindich and Vinnick completely cleaned out their gold positions in the same quarter. So, you know, someone's bargain may not be someone else's bargain, and this is an ongoing type of portfolio reallocation and reshuffling, not much more.
So we can't read into too much of what the big hitters are buying or selling. So does that mean we're just going to have to wait for Ben Bernanke later this month? Or can we do something in advance? Maybe if traders want to get involved in something like maybe platinum or palladium, perhaps?
Yeah, we could do a couple of things. First of all, on this physical side, the fact that these portfolio type of players are buying has not been able to overcome a sizable decline in overall demand. Investment was down more than 20% on the quarter globally. And of course, it wasn't able to offset, you know, slumping demand out of key markets like India and China. So perhaps we should look at other sectors. Certainly the miners might present less of a downside risk for certain would-be investors at this point, obviously given the fact that some of these shares have lost 70–80% of value. And if you happen to be bottom fishing and find a firm out there that has perhaps more cash in the bank than its outstanding shares are valued at, why not? I mean, basically as a medium-term play, I would say that there's better potential. Platinum and palladium definitely offer great value. Anything under $1,500 for platinum and around $550 for palladium puts a lot of producers at risk because of production costs. And, we've seen time and again that discounts such as we currently see, for instance, gold to platinum, or platinum to gold, I should say, don't tend to last very long. Palladium I'm most excited about because effectively we have a swing underway which will reduce last year's surplus of about 1.2 million ounces to a deficit next year of as large as 930,000 ounces plus. So if that happens, that is a sizable shift in the supply and demand market for that noble metal. And I think it's going to please a lot of people who pay close attention to it at this point.
This market has fewer players.
We're coming into a Monday where we're going
to enter in a new stage. It's
a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.